Hey guys, tonight we're walking into a world that tried everything in its power to make sure this story never happened. We're stepping into the smoke-filled offices, the gleaming storefronts, the cramped back rooms where ledgers were balanced by lamplight, and the barbershops where million-dollar deals got made between a haircut and a shave. Tonight, we're talking about how black entrepreneurs built empires during segregation, not despite America, inside it. So before you settle in, take a quick second to like the video and subscribe, but only if you genuinely love drifting off to history that hits different. And drop a comment letting me know where you're listening from tonight. Tell me if you've ever walked past a building in your city or town and had no idea it used to be something extraordinary. A black-owned hotel, a bank, an insurance office. Something that generations of people poured their lives into. I'd love to hear it. Now dim the lights. Maybe grab something warm to drink. And let's get into a story that textbooks spent 100 years trying to footnote into obscurity. Let's get curious for a second. Have you ever wondered what it actually meant to run a business when the law itself was working against you? When your customers couldn't walk through the front door of a competitor's store, couldn't stay in their hotels, couldn't get a loan from their banks, and so they came to you. Did you know that by 1900, Black Americans had built hundreds of banks, dozens of newspapers, entire neighborhoods of commerce, hospitals, insurance companies, and manufacturing operations, all inside the walls of a system designed to keep them broke and contained? Have you ever heard the name C.J. Walker and actually understood the scale of what she pulled off? In an era when neither her race nor her gender was supposed to own anything at all. What about the Greenwood district in Tulsa? Not just the fire, but what was there before the fire? The living, breathing, earning, thriving city within a city that Black Tulsans built from nothing. Have you ever stopped to think about what it took? The nerve, the strategy, the sheer refusal to accept the terms the world was offering. To look at a system of violent exclusion and say, fine, then we'll build our own. Congratulations. You've just woken up somewhere in Black America, somewhere between 1880 and 1950, in a city or town that has two economies running side by side. One that belongs to the people who wrote the laws, and one that belongs to the people the laws were written against. You are in the second economy. And if you know how to move, how to build, how to see the angle that everyone else is too afraid or too comfortable to see, you might just build something that lasts. Let's start at the beginning, which is not actually the beginning, because the real beginning is further back than you might expect. The story of black entrepreneurship during segregation cannot be told without understanding what came before segregation and what it cost to get there. Here's the thing about the period immediately after the Civil War that history classes tend to breeze past in about 45 seconds. For a brief, remarkable window, roughly 1865 to 1877, something almost inconceivable was happening in the American South. Black men were voting. Black men were holding public office. There were black sheriffs, black state legislators, 2 black United States senators. Black communities were establishing schools, churches, land-holding cooperatives. Freed people were pooling resources, buying property, starting businesses. The Freedmen's Bureau, imperfect and underfunded as it was at least nominally trying to help newly freed people establish economic footholds. Some black families, through extraordinary effort and the occasional honest land deal, were beginning to accumulate small amounts of property. And then Reconstruction ended, not with a whimper, but with a coordinated campaign of terror, disenfranchisement, and legal violence that dismantled nearly everything that had been built. The Compromise of 1877 effectively ended federal protection of black political and civil rights in the South. What followed, sharecropping, convict leasing, poll taxes, literacy tests, grandfather clauses, black codes, and eventually the full architecture of Jim Crow, was a deliberate, systematic effort to re-establish economic dependence and political powerlessness without technically re-establishing legal slavery. The goal was to keep black labor cheap, black land scarce, and black wealth impossible. But here's the thing about walls. Sometimes, when you build them high enough, the people inside stop looking for the gate and start building upward. The late 19th century saw something remarkable happen, precisely because white-owned businesses would not serve black customers, would not let them in the door, sit at the counter, stay in the rooms, use the facilities. Black communities became, out of necessity, self-sufficient in ways that created enormous internal economic demand. Every barbershop, every funeral parlor, every grocery store, every hotel that a white-owned business refused to provide to black customers was a market waiting to be filled. Necessity had always been the mother of invention. Exclusion, it turned out, had a way of creating entrepreneurs. You understand this immediately when you walk through the business district of any mid-sized black community in the early 1900s. The first thing that strikes you is how complete it is. Not in the way that a sprawling suburban strip mall is complete, with all its sameness and corporate anonymity. Complete in the way that a living system is complete. Every function filled, every need addressed, every gap covered by someone who saw the need and decided to meet it. There's the barbershop, which is never just a barbershop. The moment you push open that door and hear the bell above the frame, you step into the nerve center of black economic and social life. The smell hits you first. Bay rum aftershave, warm lather, a hint of pomade, and the coffee someone has had brewing since early morning. The chairs are occupied, but the chairs are almost beside the point. The real business of the barbershop happens in the 4 feet of space between the man getting his hair cut and the 4 other men waiting their turn. Real estate deals get floated here. Job tips get passed. Grievances get aired. Political strategy gets made. The barber himself, a man named James, let's say, with hands so steady they could thread a needle blindfolded, and a memory sharp enough to recall not just every customer's preferred cut, but their mother's name, their trouble at work, their son's school situation. James is one of the most powerful men in the neighborhood. Not because he has money, though he does well enough. Because he has information. Because everyone talks to James, and James listens to everything. The barbershop is also, in ways that won't fully be studied until decades later, an early form of black business mentorship and networking. Men who figured something out, how to navigate the bureaucracy to get a business license, which white banker is occasionally willing to make a loan on fair terms, which city official can be quietly reasoned with, and which one is a lost cause. Pass that information in the barbershop. There is no chamber of commerce that will take your membership. There is no Rotary Club lunch. There is this, the barbershop, the beauty salon 2 doors down, where the same conversations happen in a different key, among women whose business networks are, if anything, even more tightly woven and fiercely maintained. These spaces are infrastructure. They just don't look like it from the outside. Next door to the barbershop, there's a dry goods store run by a woman named Ida. Ida has been running this store for 11 years, which means she has survived 2 recessions, a flood that took out her first storefront, a supplier who tried to change the terms on her after her order was already placed, and the particular exhaustion of being both the proprietor and the entire staff for the first 4 years of operation. Ida's store smells like flour, dried beans, tobacco, and the faint sweetness of the candy jars lined up along the counter. She extends credit to the families she trusts, and she knows every family in a 6-block radius well enough to make that judgment call, which means her customers are loyal in the way that only people who've been treated with dignity in a world that often withholds it can be loyal. They will walk past 3 other stores to buy their coffee from Ida. They will wait a week for an item she's ordered when they could get it tomorrow from the white-owned store on the other side of town. Because Ida looks them in the eye. Because Ida knows their names. Because Ida's store is theirs in a way that the other store will never be. This is the economy you have inherited. This is the world you've woken up in. And in this world, the rules of business work differently than the textbooks will later describe. Not because black entrepreneurs were operating outside capitalism, but because they were operating inside a version of capitalism that had been deliberately distorted to exclude them, and they had adapted to those distortions with such ingenuity that they'd built something the distortions were never supposed to allow. Let's talk about the economics, because the economics are both infuriating and in their way fascinating. In a normally functioning market, to whatever extent such a thing exists, capital flows to opportunity. An entrepreneur with a good idea and a reasonable credit history can secure a loan, build a business, hire employees, expand, and eventually build wealth that can be passed to the next generation. The market, at least in theory, doesn't care about your race. It cares about your ability to generate returns. Jim Crow broke this. Deliberately and by design. Black entrepreneurs could not get loans from most banks. Period. Not without extraordinary collateral. Not without a white cosigner in many cases. Not at fair interest rates under any circumstances. This was not a matter of individual banker prejudice, though there was plenty of that. It was a structural feature of a financial system that had decided black wealth was not a goal to be facilitated, but a threat to be prevented. Black people could not own property in certain neighborhoods, which meant they could not use real estate as collateral, which meant the principal mechanism by which American wealth was historically accumulated was simply unavailable to them in most of the country. Black business owners could not join trade associations or professional guilds in most of the South. They could not advertise in white-owned newspapers. They could not bid on government contracts in any state that had anything to do with the color line, which was effectively every state south of the Mason-Dixon and several north of it. Their customers could not safely travel to reach their businesses in many places. Their employees could not live in certain neighborhoods, which constrained the labor pool and the customer base simultaneously. And yet, the response to this systemic exclusion was one of the most remarkable chapters in the history of American commerce. What black entrepreneurs built during segregation was not a consolation prize. It was not a shadow economy, or a lesser version of what existed elsewhere. At its peak, in its best moments, in its most fully realized forms, it was something that the people who built the walls had not anticipated and did not know how to answer. The first thing they built was banking, because if no one will lend you money, you build institutions that will. The story of black banking in America is a story that deserves its own hour, its own shelf of books, its own monument somewhere. But let's do it justice for a few minutes right now. The first black-owned bank in the United States was the Freedmen's Savings Bank. which was technically chartered by Congress in 1865 to serve formerly enslaved people and free black people. This institution, at its height, had 37 branches in 17 states and deposits from hundreds of thousands of black Americans, ordinary people, many of them formerly enslaved, who had trusted this institution with every dollar they'd managed to save. In 1874, the bank collapsed. Mismanagement, fraud, and the general financial crisis of the era wiped out most of the deposits. The people who lost money in that collapse, people who had often saved those dollars under conditions of extreme hardship, lost everything they'd put in. Frederick Douglass, who briefly served as president of the bank in its final months and tried to save it, later said that the collapse of the Freedmen's Savings Bank had done more damage to black economic life than any single event since emancipation. You might expect that a catastrophe of that scale would have destroyed the appetite for black-owned banking for a generation. Instead, something different happened. The lesson was learned, not that banking was too dangerous, but that black depositors needed black-owned and black-controlled banks, institutions whose leadership had both the competence and the aligned incentives to protect their customers' money. Within a decade of the Freedmen's collapse, a new wave of black-owned banks began to appear, built more carefully, governed more accountably, and rooted specifically in the communities they served. By 1900, there were more than 24 black-owned banks operating across the United States. By 1910, that number had grown significantly. The True Reformers Bank in Richmond, Virginia, founded in 1889, was the first fully black-owned and black-managed bank in the country, different from the Freedmen's in that the federal government had no hand in it at all. It was built, managed, and sustained by the black community, specifically by a fraternal organization called the Grand Fountain of the United Order of True Reformers, which had started as a mutual aid society and grew into a financial services operation of remarkable breadth. The True Reformers didn't just run a bank. They ran a hotel, a real estate operation, a newspaper, a retirement home. They understood, in ways that would take mainstream business education decades to fully articulate, that wealth was not a single stream but an ecosystem. Multiple institutions reinforcing each other, building a resilience that no single enterprise could achieve alone. This model, the mutually reinforcing ecosystem of black financial institutions, would become the blueprint. Everywhere black communities developed sufficient density and stability, the pattern appeared. A bank, an insurance company, a newspaper, a hotel or boarding house, a funeral home. These were the 5 pillars of black economic infrastructure, and understanding why each of them mattered illuminates the whole structure. You wake up on a Tuesday morning, and today is the day you've decided to do it. You've been running numbers in your head for 6 months. You've got savings, you've got a plan, you've got a handshake understanding with 2 suppliers and a location in mind. Today, you're going to try to make your business official. The first thing you need is money, not the money you have, which you'll need for inventory and operating expenses, but a loan, the kind of starting capital that separates a hustle from a business. You walk into the black-owned bank on the corner of Farish Street, or Auburn Avenue, or Greenwood, or wherever your particular downtown is, and you sit down across from a man named Mr. Henderson. Mr. Henderson looks at your papers. He asks you questions about your plan, your customers, your suppliers, your contingencies. He is not doing you a favor. He is evaluating a business proposition. But here's the difference between this and what would happen at the white bank across town. Mr. Henderson is not looking for a reason to say no. He is looking for a way to say yes, because Mr. Henderson grew up 2 neighborhoods over, because he knows your family, because black wealth in this community is not a threat to his institution. It is the entire point of his institution. He doesn't need a white cosigner. He doesn't require you to put up twice the collateral a white borrower would need for the same loan amount. He is, in the purest sense, a banker who is aligned with his customers. You leave with a loan. It is not a large loan by the standards of what white-owned businesses can access. The black bank's total capital is a fraction of what the First National Bank down the street holds, and that constraint is real and frustrating. But it is enough to start. And in a world where no was the default answer from every other institution, a small yes is a revolution. The insurance industry tells a parallel story that is in some ways even more extraordinary. Life insurance in the early 20th century was one of the most important financial products available to ordinary Americans. It was the mechanism by which a family could protect itself against the catastrophic economic consequences of losing a breadwinner. A death benefit that could pay off debts, keep children in school, prevent the forced sale of a home or a farm. For black Americans, this product was either entirely unavailable or available only on grotesquely unfair terms. White-owned insurance companies either refused to cover black policyholders outright or charged them premiums 2 and 3 times higher than those charged to white customers with identical risk profiles, while simultaneously offering lower payouts. The reasoning given was actuarial. Black Americans had shorter life expectancies, the companies claimed. But the reasoning was circular. Black Americans had shorter life expectancies partly because of the poverty and lack of medical access that the same discriminatory financial system had created. The response, again, was institution building. North Carolina Mutual Life Insurance Company, founded in Durham in 1898 by John Merrick and Aaron McDuffie Moore, would become the largest black-owned business in America for much of the early 20th century. Its slogan, "The greatest Negro business in America," was not bragging. It was accurate. By 1920, North Carolina Mutual had assets exceeding $1 million, a sales force operating across multiple states, and tens of thousands of policyholders whose families slept a little easier, knowing that catastrophe, if it came, would not mean total financial ruin. Durham's Parish Street became known as the Black Wall Street of North Carolina, a street where the density of black-owned financial institutions was such that you could meet every banking and insurance need in a single afternoon's walk. John Merrick himself was a fascinating figure. A man who had been born enslaved, taught himself barbering, became the personal barber of governors and industrialists, and used both the income and the access that position provided to build the foundation of what would become an insurance empire. He understood something essential, that proximity to power, even proximity that came with its own indignities, could be converted into capital if you were patient and strategic enough. His co-founder, Aaron Moore, was a physician, which meant North Carolina Mutual was built at the intersection of financial sophistication and deep community need. These men were not lucky. They were methodical. Durham, in fact, deserves to be understood as one of the most concentrated examples of what was possible under the constraints of segregation. The Mechanics and Farmers Bank, founded in 1908, would survive for over a century. The Mutual Building and Loan Association provided mortgages to black homeowners who could get them nowhere else. Businesses begat businesses. A successful man or woman reinvested in a neighbor's enterprise, which generated returns that funded another loan, which created another business, which hired more employees, which created more customers for existing businesses. Booker T. Washington, who visited Durham in 1910 and reported on what he saw there, called it a model for black economic self-development. Even W.E.B. Du Bois, who disagreed with Washington on essentially everything ideological, grudgingly admitted that whatever Durham was doing, it was working. But let's not pretend that Durham happened in a vacuum, or that it was the only place. The story of black entrepreneurship during segregation is not a single story. It is dozens of stories, erupting independently across the country in places as different as each other as Atlanta and Oklahoma and Harlem and New Orleans. Each version of the story has its own characters, its own texture, its own particular genius, and each one deserves its moment. Let's go to Atlanta. Specifically, let's go to Auburn Avenue, which local black residents called Sweet Auburn, and which Fortune magazine in 1956 would call the richest Negro street in the world. In the early decades of the 20th century, Auburn Avenue was everything. It had the offices of the Atlanta Life Insurance Company, which would become one of the largest black-owned businesses in the country. It had the Citizens Trust Bank, one of the few black-owned banks to survive the Great Depression. It had the Atlanta Daily World, one of the most important black newspapers in the South. It had hotels, restaurants, professional offices, churches. It had Herndon's barbershop, which we'll come back to, because the man who owned that barbershop is a story that demands to be told on its own terms. Alonzo Herndon was born enslaved in Georgia in 1858. Let that land for a moment. A man born enslaved in 1858 in the antebellum South, in a time and a place where the explicit legal purpose of his existence was to be someone else's property, would die in 1927 as the wealthiest black man in Atlanta and one of the wealthiest black men in America. He was a sharecropper's son who taught himself to shave, moved to Atlanta in his 20s, opened a barbershop, and proceeded to make of that barbershop something almost impossible to categorize. Herndon's barbershop on Peachtree Street was not the neighborhood place you drove past. It was a destination. Marble floors, manicure stations, a shoe shine parlor, 25 chairs, a clientele that included the most powerful white men in Atlanta politics and business. His prices were high. His quality was impeccable. His service was so good that men who would not eat in the same restaurant as a black person would sit in Alonzo Herndon's chair and submit themselves to the razor of a man the law classified as their inferior. He took every dollar that barbershop made and invested it. First, in more barbershops. He eventually owned 3 in Atlanta. Then, in real estate. Then, in 1905, he bought a struggling fraternal benefit society for $1 and $500 in assumed debt, and turned it into the Atlanta Life Insurance Company, which would write policies for hundreds of thousands of black Americans across the South. Herndon understood something that the most sophisticated modern venture capitalists understand. The best businesses are not just businesses. They are platforms. The barbershop was a platform for customer relationships and cash flow. The cash flow was a platform for real estate. The real estate was collateral. The insurance company was a platform for massive financial reach. Each thing enabled the next. By the time he died, Herndon had built a house, Herndon Home, which still stands in Atlanta, that would not have looked out of place in the finest white neighborhood in the city. A man born enslaved, building a mansion that would outlast his oppressors. Here's the thing about Alonzo Herndon that the stories don't emphasize enough. He was not exceptional because he was uniquely brilliant, though he clearly was exceptionally smart. He was exceptional because he looked at a system of violent exclusion and found the one angle it hadn't fully closed off. The white barbers in Atlanta had decided in their wisdom to refuse service to white men if it meant sharing a barbershop with black colleagues or customers. Alonzo Hernan read that situation and saw not a limitation, but an opening. He would serve white customers on his own terms, in his own space, at his own prices, with no apology and no subservience beyond what the transaction itself required. He used proximity to white economic power to build black economic power, and he did it in a way that never compromised his ability to build institutions that served the black community first. He was not the only one who found those angles. All over America, in this same period, black entrepreneurs were finding the gaps in the walls that their oppressors had been too careless or too arrogant to close. The segregated South was not the only geography of black enterprise either. Let's go north. Let's go to Harlem. In the 1910s and 1920s, the Great Migration was transforming American cities. Hundreds of thousands of black Americans were leaving the South, fleeing the violence and economic suffocation of Jim Crow, chasing the possibility of factory wages and greater personal freedom, and pouring into northern cities, Chicago, Detroit, Philadelphia, New York. They settled in dense communities, and those dense communities generated economic demand that the surrounding white-owned businesses were slow to serve. In New York, the community was Harlem, and what grew in Harlem during these decades was something unprecedented in black American history. An urban, northern, culturally confident black middle class, and with it, a black business culture that looked and felt different from what had emerged in the South, but that was built on the same fundamental understanding. If the world outside won't let you in, build the world inside. Harlem in the 1920s had black-owned theaters, beauty salons, restaurants, clothing stores, publishers, record companies, and real estate operations. The building trades, not just the theoretical ownership of buildings, but the actual construction and maintenance of them, had become a significant source of black employment and entrepreneurship in New York. Despite the union exclusions that kept black workers out of the better-paid skilled trades, Philip Payton, a real estate agent working in Harlem in the early 1900s, had understood before almost anyone else that white landlords in Harlem were going to have vacancies as the neighborhood changed, and he had convinced those landlords to let black tenants fill those vacancies at slightly higher rents, which the landlords accepted because the alternative was empty buildings. Payton's company, the Afro-American Realty Company, essentially created the black Harlem that would become famous. He saw the gap and walked through it. The higher rents that black Harlemites paid, a pattern of extraction that would continue for decades, were also a source of resentment and financial strain. But the physical foothold in Harlem was real, and what grew in that space was extraordinary. The Harlem Renaissance, which most people understand primarily as a cultural explosion, and it was that, it absolutely was that, was also a business story. The poets and novelists and painters and musicians of the Harlem Renaissance did not generate their work in a vacuum. They generated it in a context supported by black-owned publishers, black-owned newspapers like the New York Age and the Amsterdam News, black-owned record companies, black-owned clubs and performance venues, black entrepreneurs who understood that culture was an industry and that the people who owned the infrastructure of culture captured most of its economic value. Madam C.J. Walker, who had built her hair care empire partially in Indianapolis and partially in New York, built her Harlem townhouse on 136th Street, a building that became a salon in both the cosmetic and the intellectual senses for the artists and activists and business people who were making the Renaissance. She understood that in Harlem, in that moment, economic power and cultural power were not separate things. They were the same thing, feeding each other, building towards something. Let's talk about Madam C.J. Walker. Let's give her the full treatment she deserves. Sarah Breedlove was born in 1867 in Delta, Louisiana, the first child of her family to be born free. Her parents had been enslaved on a cotton plantation. She was orphaned by the time she was 7. She was married by 14, a common pattern for young black women in the post-Reconstruction South, where marriage to an older man offered a degree of economic protection that an orphan girl had no other way to access. She was widowed by 20, with a small daughter and no resources beyond her own labor. She worked as a washerwoman in St. Louis for nearly 2 decades. Physically brutal work, bent over hot water and harsh chemicals in all weather, earning barely enough to keep herself and her daughter alive, let alone to save anything. And then, around the turn of the century, in her late 30s, she began to lose her hair. Scalp conditions and hair loss were common among black women in this era. A consequence of the infrequency of washing, heating water was expensive and time-consuming. The harsh quality of the soaps available, the physical stress of manual labor, and in many cases nutritional deficiencies. The beauty industry that existed at the time was not designed for black women's hair. The products available were created for European hair textures and in many cases made the problem worse. Sarah Breedlove began experimenting. She began mixing formulas, testing products, talking to other women about what worked. She wasn't the only person doing this. Several entrepreneurs were working in the same space at the same time, including Annie Turnbow Malone in St. Louis, who would later have her own remarkable business story, and who gave Sarah Breedlove her first sales job in the hair care industry. What Sarah Breedlove had, beyond the products she developed, was an extraordinary gift for business architecture. She understood, in a way that her competitors did not, at least not at the same scale or speed, that the product was only one part of the system. The more important part was the distribution network. She didn't just want to sell a hair treatment. She wanted to build an army of women who would sell it for her, and in selling it, build economic independence for themselves. The Madam Walker sales agents, eventually tens of thousands of women across the country, were not just a sales force. They were the embodiment of a philosophy. Walker called it cleanliness and loveliness, but it was about more than hygiene and beauty. It was about the economic empowerment of black women, one transaction at a time. Walker moved to Indianapolis in 1910, which at the time had one of the largest and most commercially developed black communities in the North, and built her headquarters there, a factory, a laboratory, a beauty school, an office building. The factory employed hundreds of black workers. The beauty school trained agents who went back to their communities and started businesses, becoming customers of the Walker system and generators of new customers at the same time. The business model was, in modern parlance, a franchise system and a multi-level distribution network, built decades before those terms existed in business education. By 1917, Walker was reportedly the first black American woman millionaire, a claim that some historians dispute on the grounds that the documentation is incomplete. But no one seriously disputes that she was generating extraordinary wealth by any standard. What Walker did with that wealth was as important as how she made it. She donated enormous sums to the NAACP, to Tuskegee Institute, to anti-lynching campaigns, to the preservation of Frederick Douglass's home. She hosted summits of black leaders at her estate in upstate New York. She lobbied Woodrow Wilson in person, having secured a meeting through sheer persistence. On the question of anti-lynching legislation, Wilson did not act, but Walker made sure the record showed that she had tried. The money she had made selling hair care products to black women became, in her hands, a political instrument. She never separated the business from the cause. They were the same thing. Walker died in 1919, at 51, of kidney failure and hypertension, diseases that her doctor attributed partly to the relentless pace at which she worked. She left behind an estate worth several $100,000, a business that her daughter would continue for decades, and a model that other black entrepreneurs had already begun to adapt. The idea that a black woman could build something of that scale, in that era, from those origins, it was not just inspiring. It was a proof of concept. It expanded the set of things that black Americans understood to be possible. Now let's go to Oklahoma. Because Oklahoma, in the first 2 decades of the 20th century, was something that the rest of the country wasn't entirely ready for. When Oklahoma Territory became a state in 1907, it was shaped by several unusual factors. The land-run era had created a chaotic kind of opportunity, not equally distributed, not free of violence and dispossession, but genuinely more fluid than the older settled South. Black Americans had come to Indian Territory as enslaved people held by members of the 5 civilized tribes, and after the Civil War, as freedmen who had been promised, and in some cases received land allotments. Some black towns had been founded in the territory, most famously Boley, which at its peak in the early 1910s was one of the most prosperous all-black towns in America. And in Tulsa, in a neighborhood that began as a segregated settlement on the north side of the Frisco Railroad tracks, something was happening that would eventually be called, with complete accuracy, the Black Wall Street of America. The Greenwood district of Tulsa got its name from Greenwood Avenue, which by the late 1910s had become one of the densest concentrations of black-owned businesses in the world. Not in America, in the world. The scale of it requires a moment to actually absorb. Within a few square miles, there were more than 30 grocery stores and meat markets, more than a dozen hotels, 15 dentists and 15 doctors, 2 hospitals, a school system, a library, a bus service, 2 newspapers, a law firm, a real estate operation, jewelry stores, clothing stores, movie theaters, a bank, and O.W. Gurley's office building, which was one of the first commercial buildings in Tulsa built by and for black business owners. O.W. Gurley, who had come to Tulsa from the South with a land allotment and a school teacher's salary and turned both into a real estate empire, was one of the pillars of Greenwood's economic structure. He built properties, rented to black business tenants, used the rental income to build more properties, and in doing so created the physical infrastructure that made the density of Greenwood's commerce possible. The people who built Greenwood understood something fundamental about economic systems. They called it the Negro dollar. The idea that a dollar spent within the black community should circulate as many times as possible within that community before leaving it. In a functional market, a dollar spent at a black-owned business pays a black owner, who pays black employees, who spend their wages at black-owned shops, which pay their owners, and so on. Each transaction keeping the wealth inside the community rather than immediately transferring it outward. By some estimates, A dollar in the Greenwood district circulated between 36 and 100 times before leaving the community. Compare that to modern, predominantly black neighborhoods, where studies have found that dollar circulates for as little as 6 hours before leaving. The people who built Greenwood weren't just building businesses. They were building a closed-loop economic system. J.B. Stratford was a lawyer and hotel owner in Greenwood, whose philosophy of black economic solidarity was almost aggressive in its clarity. He believed, and said publicly, that black people needed to concentrate their economic activity with each other, not as a gesture of racial pride, but as a strategic economic decision. He built the Stratford Hotel, which at the time was the largest black-owned hotel in the United States, with 54 rooms and a reputation for quality that drew black travelers from across the region. In an era when black people could not stay in white hotels, not the nice ones, not in Tulsa, not in most of the country, having a hotel that was both excellent and welcoming was not just a business. It was a statement about what black life could look like. Dr. A.C. Jackson was a surgeon in Greenwood who had been trained at Mayo Clinic and was considered by many of his medical colleagues to be one of the finest surgeons in the country of any race. He could not practice at white hospitals in Tulsa. He practiced at Greenwood's Black Hospital, treating patients who would have had no access to his skill otherwise. His presence in Greenwood was itself a kind of argument that black professional excellence, confronted with exclusion, would build its own institutions rather than disappear. You walk down Greenwood Avenue in 1920, and the first thing that strikes you is the noise. Not chaos. Purposeful, commercial noise. The clang of a delivery being made to the grocery on the corner, the bell above a shop door, the sound of a typewriter through an open second-floor window, someone in a law office or an insurance company getting work done. Children on their way to school, because Greenwood has schools, good ones, built and funded by the community itself because the city certainly wasn't providing them. The barbershops are full, the beauty salons are full, the cafes smell like fresh coffee and cornbread, and the kind of cooking that comes from someone who learned it from someone who loved them. You can get a suit made here. You can get your teeth fixed here. You can get legal advice here. You can deposit your money here. You can buy a house here. You can do everything that a human being with money and ambition might want to do, without once setting foot in the part of town that doesn't want your business. This is not a small thing. This is an entire world, built from nothing, built in defiance of everything that was supposed to prevent it, built with the labor and the vision and the stubbornness of people who had decided that if the door was closed to them, they would build their own house. And then, in June of 1921, a mob burned it down. The Tulsa Race Massacre of 1921 is one of the most devastating events in American history, and one of the most thoroughly suppressed. For decades, it was not taught in Oklahoma schools. The official records were destroyed or hidden. The survivors were told, in various ways and through various pressures, to be quiet about what they had seen. The full story didn't begin to emerge publicly until the 1990s, and it is still being documented, including through ongoing archaeological excavations of mass grave sites. What happened in those 2 days in late May and early June of 1921 was not a riot. A riot implies spontaneous mutual violence. What happened in Tulsa was a massacre, organized, and in many respects facilitated by the state. A white mob, eventually deputized by the local government, burned 35 square blocks of Greenwood to the ground. They bombed buildings from private planes, making Tulsa one of the only American cities ever to be bombed from the air on American soil. They killed somewhere between 100 and 300 black residents. The precise count is still disputed because the records were destroyed. They arrested and detained more than 6,000 black Tulsans. They destroyed more than 1,000 homes, more than 200 businesses, a hospital, a library, a school, the offices of 2 newspapers, the Stratford Hotel. Everything that Greenwood had built over 2 decades was reduced to ash and rubble in 48 hours. The stated trigger was an accusation against a young black man named Dick Rowland, who was accused of assaulting a white elevator operator named Sarah Page. The nature of the incident remains disputed. Page never pressed charges, and most historians believe the encounter was an accident, a stumble in a small elevator car that was misinterpreted or misrepresented. But the accusation was enough. Because in the context of White Tulsa in 1921, Greenwood's success was a provocation, a community that prosperous, that self-sufficient, that visibly thriving, was an implicit argument that the racial hierarchy was not natural, not inevitable, not justified. The massacre was not a response to Dick Rowland. It was a response to what Greenwood represented. The survivors rebuilt. Let that sink in for a moment. Within a few years, despite the fact that the city of Tulsa refused to compensate them, despite the fact that insurance companies denied most of their claims, despite the fact that the city tried to pass zoning laws that would have prevented rebuilding on the same land, despite all of that, the people of Greenwood rebuilt, not to the same scale. The massacre had destroyed not just buildings but capital, records, networks, the accumulated economic infrastructure of a generation. Not everything comes back from that, but what they built again in the years following was evidence of something that the people who burned Greenwood had not fully understood and could not fully destroy. The capacity to build was still there, the knowledge of how to do it, the will. J.B. Stratford, who had fled Tulsa after being falsely accused of inciting the massacre, was cleared of those charges in 1996, 75 years after the fact, by which point he had been dead for 50 years. His great-grandson, Earl Stratford, attended the formal exoneration ceremony. Some forms of justice are very slow. The story of black enterprise during segregation is, in many ways, a story about the newspaper industry, because without the black press, much of the rest of this story doesn't happen. The black press was not just a communication tool. It was an economic institution in its own right, a platform for advertising black businesses to black customers, an organizing force for black economic community, and a megaphone for the ideas about wealth, self-determination, racial uplift, consumer power that drove the entrepreneurial culture. The Chicago Defender, founded by Robert Abbott in 1905, was in many ways the most important black newspaper in America during the Great Migration era. Abbott, who had come to Chicago from Georgia with almost no money and a law degree he couldn't use because he couldn't find a firm that would hire him, started the Defender with 25 cents in capital and a kitchen table as an office. Within a decade, it had a circulation of hundreds of thousands, with 2/3 of its readers outside of Chicago, distributed through Pullman porters. The black men who worked the sleeping cars on the nation's railroads and became, in their travels, a distribution network for information that the white press either ignored or distorted. The Defender told black readers in the South what Chicago was like, what the wages were, where to look for work, what the conditions of black life in the North were, honestly and specifically. It also ran columns about black business, black achievement, black political organizing. It was a newspaper and an economic development tool and a cultural institution all at once. When the white Southern establishment figured out what the Defender was doing, persuading black workers to leave the South's cheap labor pool and go north, some tried to ban it. Sheriffs confiscated copies at train stations. Some Defenders arrived already folded inside other papers to avoid confiscation. The porters who delivered it were sometimes threatened. The paper kept publishing. Robert Abbott became a millionaire. He built the Chicago Defender into a media company with a building, a printing operation, a full staff of journalists, and a business model that included not just subscription and advertising revenue, but a deep relationship with the black commercial community. The businesses that advertised in the Defender, insurance companies, beauty products companies, professional services, were part of the same economic ecosystem that the paper was documenting and promoting. It was a feedback loop. The businesses generated advertising revenue that funded the journalism that promoted the businesses. The Pittsburgh Courier, founded in 1907, was another titan of the black press. By the 1930s and 1940s, it had a circulation rivaling the Defender, with 14 regional editions distributed across the country. During World War II, the Courier launched the Double V campaign, Victory Abroad against Fascism, Victory at Home against Racism, which became one of the most effective mass mobilization campaigns of the black press era. Robert Vann, the Courier's editor and publisher, was one of the most politically influential black journalists in American history. He understood that a newspaper that served a community could also organize that community, and that an organized community was an economic force. Let's go back to the street level for a moment, because the street level is where most of this happened. Not in the offices of the insurance company presidents or the boardrooms of the bank directors, though those spaces mattered, but in the millions of small transactions, small decisions, small acts of economic solidarity that constituted black economic life during segregation. You're a woman in Atlanta in 1935. You run a laundry service out of your home. You take in work from 5 white families and 4 black families. The white families pay a little more, and you resent that you need their money, but you need it, so you take it. You hire your sister to help when the orders are heavy. You keep a notebook with every client's preferences, every piece of clothing noted and accounted for, because you cannot afford to lose a single customer to a lost button or a misfolded collar. On Thursday evenings, you attend a women's business group at your church, where 7 other small business owners, a seamstress, a woman who runs a catering operation out of her kitchen, a beauty operator, a woman who sells homemade preserves door to door, share information. Who's hiring, who's not paying, what the insurance man said, whether the supply store downtown is extending credit to black customers this month or has decided to be difficult again. This women's group is not formalized. There's no charter, no bank account, no official meeting minutes, but it performs every function of a small business association. Information is shared, referrals are made. When the seamstress's supplier raises her prices without warning, the other women help her identify an alternative. When the catering woman lands a contract for a church reception and needs more help than her kitchen can provide, the laundry woman's sister gets hired for the day. The relationships are the infrastructure. In the absence of formal institutions, and there was a constant shortage of formal institutions relative to the need, relationships were what held the economic ecosystem together. This is an important thing to understand about black entrepreneurship during segregation. It was not primarily a story of heroic individuals. It was a story of communities. The individual entrepreneurs, the Alonzo Herndons and the Madame Walkers, were remarkable. but they were also the visible surface of a much deeper structure of mutual support, information sharing, mentorship, and collective economic action. No one built an empire alone. They built it with suppliers who extended credit, customers who stayed loyal out of principle as well as quality, employees who worked for lower wages than they could have commanded elsewhere because they believed in what was being built, community members who deposited their money in the black bank and bought their groceries from the black store and had their insurance through the black company, because they understood viscerally that their individual economic choices aggregated into something larger than any single transaction. Booker T. Washington understood this more clearly than almost anyone. His vision, simplified and distorted by generations of debate into a caricature of accommodation and submission, was at its core a vision of economic nationalism. Build businesses, train workers, accumulate capital, create institutions. His National Negro Business League, founded in 1900, was an attempt to systematize and accelerate this process at a national scale. To create a network that connected black business owners across the country, shared best practices, celebrated success, and made the case through example after accumulated example that black economic capacity was real and growing. By 1915, the year of Washington's death, the League had more than 600 chapters. It was a national network for black commercial intelligence and community building. Du Bois, who agreed with Washington on very little, agreed on this, that the economic health of the black community was inseparable from its political and social liberation. He reached that conclusion from the opposite direction, arguing that political rights and social equality were prerequisites for economic advancement rather than consequences of it. But the goal was the same: build something, own something, create something that cannot be taken away. The famous double consciousness that Du Bois described, the sense of always looking at oneself through the eyes of others, of measuring one's soul by the standards of a world that does not fully recognize one's humanity, was also, in his analysis, an economic condition. And its resolution required economic as well as political and cultural transformation. Let's talk about the beauty industry for a moment, because the beauty industry is one of the places where black entrepreneurship during segregation was most dynamic, most transformative, and most specifically tied to the texture of black life. The hair care products and beauty services market for black women in the early 20th century was, by almost any measure, enormous. There were millions of black women in America, and they all needed hair care, skin care, and beauty products. Products that the mainstream beauty industry either did not make for them or made poorly and expensively. This was a market gap of staggering dimensions, and the people who filled it became some of the most successful black entrepreneurs of the era. Madame Walker was the most famous, but she was not alone. Annie Turnbow Malone, who had trained Walker and predated her in the market, built a business empire of her own, Poro Company, headquartered in St. Louis, which at its peak employed more than 75,000 agents nationwide and had assets valued at millions of dollars. Malone's contributions to black education were extraordinary. She donated huge sums to Howard University, to Tuskegee, to orphanages, to church organizations, to the YWCA. She was one of the most generous philanthropists, black or white, of her era. Like Walker, she had been born in poverty and built something of staggering scale through a combination of product innovation, business architecture, and an almost missionary commitment to the economic uplift of black women. The beauty industry was specifically important because it created economic pathways for black women that existed almost nowhere else in the formal economy. A black woman in 1920 who needed paid work had essentially three options: domestic service, agricultural labor, or, if she was educated, teaching. The beauty industry offered a fourth option, and because it was an industry that served black customers and was built by black women, it was one where the racial and gender restrictions of the surrounding economy applied much less directly. A woman who trained as a beauty operator, learning to do hair, to apply the Walker method or the Poro method to run a salon, could be self-employed, could run her own business, could set her own hours, cultivate her own clients, build her own name. This was freedom of a very specific and very meaningful kind, in an era when that kind of freedom was in extremely short supply. The Walker training schools, Malone's Poro College, and similar institutions were not just vocational training programs. They were business incubators. The women who graduated from them went back to their communities and opened salons, became agents for Walker or Malone products, built enterprises that employed other women and served the community and generated income that circulated within the black economy. The beauty school was infrastructure. The beauty school was an investment in future entrepreneurs. There's something else worth noting about the beauty industry in this era. It was one of the first black industries to develop a sophisticated understanding of marketing, branding, and the relationship between cultural aspiration and commercial opportunity. Madam Walker's advertising, in the Defender, in the Courier, in church programs and community newsletters, was not just advertising. It was a statement about black beauty, black aspiration, black economic agency. The images of confident, well-dressed black women used in Walker's marketing were, in the context of an America that routinely denied black women's beauty and dignity, a political act. You bought the hair product, and you also bought into an image of yourself as someone who deserved beauty, elegance, and economic self-determination. The product and the message were inseparable. Let's look at another corner of this story, the funeral industry. It is, admittedly, an unusual place to look for business genius, but in Black America during segregation, the funeral home was one of the most important and durable forms of black enterprise. And understanding why tells you something important about both the economics of exclusion and the particular way that black business builders found opportunity inside it. White-owned funeral homes in the Jim Crow South would not handle black bodies. This was not universal. In some places, white funeral homes would take black business, though often in ways that were humiliating or logistically separated from their white operations. But in most of the South, black families had to bury their own. This meant that every black community needed black funeral directors, people trained to prepare bodies, to manage the legal paperwork of death, to organize services, to provide the dignified passage from life that every human culture has understood as necessary. And because the demand was inelastic, people die in every community, regardless of economic conditions, regardless of segregation, regardless of anything. The funeral business was one of the most stable forms of black enterprise in America. Stable meant more than just financially reliable, though it meant that too. It meant that black funeral homes, over generations, accumulated capital and community standing in ways that made them pillars of economic and social life. The funeral director was, in many black communities, among the most respected and financially secure of all business people. He, and increasingly, in the later decades of the century, she, had the resources to extend credit to grieving families, to provide services on payment plans, to take on a community function that went beyond the purely commercial. The funeral home was often a gathering place, a community meeting space, a venue for the organizational life of the neighborhood. The funeral director often had relationships with the community's ministers, its civic leaders, its business owners, that made him a hub of black economic and political networks. This pattern, a business that filled a gap created by exclusion, that stabilized over time because the demand was permanent, and that accumulated social and economic capital that extended well beyond the immediate commercial transaction, was replicated across dozens of industries. Black hospitals, built because white hospitals would not adequately treat black patients, became centers of medical training and community health that served generations. Black hotels, built because black travelers could not stay in white hotels, became fixtures of the black business travel circuit and created the economic infrastructure for black professional mobility. Black newspapers, black banks, black insurance companies, each one filling a gap, each one accumulating capital and relationships and knowledge that compounded over time. And through all of it, through the building and the burning and the rebuilding, through the economic cycles and the political reversals, through the constant grinding friction of operating in a society that was actively hostile to your success, something else was being built, something harder to measure than asset values or insurance policies, but perhaps more durable. A tradition, an ethic, a set of ideas about what black people could and should and would do with resources when they got them, about the relationship between individual entrepreneurial success and community obligation, about the meaning of wealth and who it was for and what you owed to the people who came after you. Madam Walker said it plainly. She had not built her business for herself alone. She had built it as a demonstration of what was possible, as a platform for others, as a proof against everyone who insisted that black women were suited only for domestic service and agricultural labor and had no place in the world of commerce. Every dollar she made was, in her telling, an argument she was making on behalf of everyone who looked like her and had been told that the doors were closed to them. This ethic, call it race uplift, call it black economic nationalism, call it whatever you want, was not without its complications. It placed enormous burdens on successful black individuals who were expected to give back, to hire within the community, to donate to institutions, to represent the race in every public act. It sometimes created a policing dynamic where black business owners who served white customers or who didn't give back generously enough faced community criticism that white business owners would never have experienced. The line between community solidarity and community pressure was not always clear, but the ethic also produced something extraordinary. A culture of black entrepreneurship that understood wealth not as an individual achievement to be hoarded, but as a community resource to be circulated. The men and women who built empires during segregation, at their best, did not build walls around their wealth. They built doors. They funded schools so that the next generation would have credentials. They founded banks so that the next entrepreneur would be able to get a loan. They donated to the NAACP so that the legal architecture of segregation could be challenged. They hired inside the community so that black workers would have jobs that paid wages they could spend at black businesses. They were not saints. None of them were saints, and some of them were quite ruthless in their business practices. But they were, many of them, people who understood that the system they were operating inside was designed to fail them individually and collectively, and who had decided that the most powerful response was to build institutions that could outlast any individual and that created conditions for the success of the people who came after. There were, of course, limits to what private enterprise could achieve, within a system as comprehensively unjust as Jim Crow. The Greenwood Massacre is the sharpest possible demonstration of those limits. All the economic success in the world could not protect 35 blocks of black prosperity from a white mob backed by state power. The insurance companies whose policies should have paid out didn't pay out. The legal system that should have prosecuted the perpetrators didn't prosecute them. The political system that should have compensated the survivors didn't compensate them. Alonzo Herndon's barbershop and Walker's factory and the Stratford Hotel and North Carolina Mutual. All of these were extraordinary achievements, and all of them existed within a political and legal context that could at any moment be used to destroy them. This is part of why the civil rights movement, with its focus on legal transformation, on the dismantling of the formal architecture of segregation, was not separate from the story of black entrepreneurship, but continuous with it. The people who marched and organized and litigated and died for civil rights in the 1950s and 1960s were the grandchildren and great-grandchildren of the people who built Greenwood and Sweet Auburn and Harlem's commercial district. They had learned from their grandparents not just the fact of what was possible, but the understanding that possibility required both building and protecting. That economic achievement without political power was always vulnerable, that the two were inseparable. The Birmingham, Alabama business community of the 1950s and 1960s, the black business owners on 4th Avenue North, who supported the civil rights movement both financially and strategically, understood this perfectly. When Fred Shuttlesworth and Dr. Martin Luther King Jr. organized the Birmingham campaign, the economic strategy was central. The boycott of downtown Birmingham businesses, the strategic withdrawal of black consumer dollars from the white-owned economy, was effective precisely because the black community had, over decades, built sufficient economic infrastructure to sustain itself through a boycott. You can boycott the white stores if you have black stores to shop in instead. You can refuse to ride the bus if there are other ways to get to work. The economic separatism of the Jim Crow era, imposed from outsiders' oppression, had inadvertently created the conditions for economic leverage from within. $1 spent at the black-owned drugstore on 4th Avenue was $1 not spent at the white-owned drugstore that enforced segregation at the lunch counter. The boycott made this logic explicit, turned the everyday economic separatism of segregated commerce into a deliberate political tool. The business people who had spent decades building that separate economy were, in a very real sense, the infrastructure of the civil rights movement. Medgar Evers, before he became famous as a civil rights leader, was an NAACP field secretary who organized black consumers in Mississippi, documenting the economic power of the black community, mapping the commercial landscape, identifying where black dollars went and where they could be redirected. He was murdered in 1963. The work he was doing at the intersection of economic analysis and political organizing was considered dangerous enough to kill him for. That tells you something about the power the people in power understood that work to contain. The economics of the black press deserve a deeper look, because what those newspapers built was not just journalism, but an entire information infrastructure that the black economy depended on. Think about what it meant to run a business with no way to advertise to your customers except through word of mouth and community networks. The white newspapers in any southern city weren't going to run your ad. And even if they were willing to take your money, their readership wasn't your customer base. The black press solved this problem at scale. When the Chicago Defender ran ads for black-owned businesses, insurance companies, beauty product distributors, professional services, restaurants, hotels. It was connecting black entrepreneurs to black consumers across a geography that would otherwise have been impossible to reach. Robert Abbott understood this from the beginning. A newspaper that served a community was also a commercial platform for that community, and the business model depended on both sides of that equation functioning together. The Defender's classified section alone was a revelation. Job listings for black workers, housing listings for black renters, business opportunities for black entrepreneurs, announcements for community organizations and civic events. All of the information infrastructure that a normally functioning economy provides through multiple channels was, for black Americans in cities like Chicago, concentrated in the pages of a single newspaper that arrived by train and was passed from hand to hand until it was nearly unreadable. People read the Defender until it fell apart. Libraries kept bound volumes. Families saved issues that contained important community news. It was that kind of document, not disposable, not a thing to be skimmed and recycled, but a record and a resource. Abbott himself, despite his eventual wealth, never forgot what the paper was for. He was notorious for personal frugality. A man who had grown up poor and who channeled every spare dollar back into the paper's expansion. But he was also generous with the causes he believed in. And the cause he believed in most was the economic and political advancement of black Americans. The Defender campaigned against lynching, against racial violence, against the economic exploitation of black workers, and it did so in language that was pointed and uncompromising in ways that white newspapers in the same era simply were not. Abbott once described the Defender's mission as not just reporting news but making news, pushing the community toward the possibilities the paper could see, even when the community itself wasn't sure they were reachable. The Baltimore Afro-American, the Norfolk Journal and Guide, the Philadelphia Tribune. Each of these papers played a similar role in its own regional context. The publishers of these papers were entrepreneurs as much as they were journalists, and the businesses they ran were integral to the commercial ecosystems of black urban life. A city without a black newspaper was a city where black businesses had no efficient way to reach their customers and where black consumers had no reliable way to know what their community's economic landscape looked like. The paper was connective tissue. Now let's take a closer look at what was happening in Chicago, because Chicago during the Great Migration years was one of the most dynamic sites of black entrepreneurship in America, and the story there has some dimensions that the Tulsa and Durham stories don't fully illuminate. The south side of Chicago, by the 1920s, was one of the largest black urban communities in the world. A community that had grown explosively as hundreds of thousands of black Southerners came north, drawn by the Defender's reporting on wages and opportunity, and by the letters from cousins and siblings who had already made the journey. The South Side's main commercial corridor, called the Stroll, on State Street between 26th and 39th, was an entertainment and business district of remarkable density and vitality. Jazz clubs, restaurants, beauty salons, barbershops, gambling establishments, real estate offices, insurance agencies, a policy lottery operation that was, in fact, one of the largest black-owned financial enterprises in Chicago during the 1920s and 1930s. The policy lottery, an illegal numbers game that was widely played in black urban communities throughout this era, is a complicated chapter in the story of black entrepreneurship that deserves honest acknowledgement. The policy kings of Chicago's South Side, men like John Mushmouth Johnson, and later the Jones brothers and Bronzeville's policy queens, operated businesses that were both genuinely entrepreneurial and genuinely exploitative. They employed large numbers of black workers as runners and station operators. They provided a kind of informal social insurance. Regular players who hit the number might use their winnings to cover a medical bill or a rent payment that they had no other way to cover. The policy bosses were also, often, community philanthropists in the Robin Hood mode, sponsoring local events, providing bail money, funding community organizations. Their relationship with the community was complicated, real, and widely understood. But they were also extracting money from people who could not afford to lose it, operating an addictive enterprise, and in many cases serving as a mechanism by which the dreams of black workers, the dream of a windfall, of a sudden escape from poverty, were channeled into something that mostly just moved their money upward. The policy lottery was not Black Wall Street. It was something else, a product of exclusion and desperation that took on the form of entrepreneurship while primarily serving to extract wealth from the community rather than building it. Its inclusion in this story is a reminder that not everything that grew in the space of black economic necessity was liberatory. Some of it was predatory. The same exclusion that produced the banks and the newspapers and the beauty schools also produced enterprises that exploited the very conditions of exclusion. The Jones brothers, Edward, George, and McKissick Jones, are worth dwelling on for a moment, because their story illustrates the complicated relationship between illegal enterprise and legitimate institution building. The brothers ran one of the largest policy operations on Chicago's South Side during the 1930s and 1940s, accumulating millions of dollars through the numbers game. Then, with that capital, they diversified into legitimate business, buying real estate, acquiring the Ben Franklin department store on 47th Street, which became the first black-owned department store in Chicago and one of the most important retail establishments in the South Side economy. They used money made from illegal gambling to build a legitimate commercial institution that served the community and created legitimate employment. The origin of the capital was morally and legally problematic. The institutions it built were real and positive. History is rarely clean. Chicago's black real estate market was another arena of extraordinary activity during this period. Jesse Binger, who had come to Chicago from Detroit with essentially no money in 1898, built the Binger State Bank, the first black-owned bank in the Midwest, from a series of shrewd real estate investments on the South Side. Binger's strategy was to buy property on the border of white neighborhoods, rent to black tenants at slightly higher rates than white landlords charged, and use the profits to fund further acquisitions. He was, in effect, doing in Chicago's real estate market what Philip Payton had done in Harlem, finding the angle that the structure of segregation left open and walking through it. His bank, opened in 1921, served as the financial backbone of Southside black business for several years. His home was bombed 5 times by white residents who objected to the integrated direction his real estate activities were pushing the neighborhood. He kept buying. The Binger State Bank collapsed in 1930 in the early months of the Great Depression, in circumstances that remain somewhat contested. There were allegations of fraud as well as the clear impact of the Depression itself. Binger was eventually convicted on embezzlement charges and served time in prison. His fate was one of the darker chapters of Southside entrepreneurial history, a reminder that the pressures on black financial institutions were extreme and that not every story ended in vindication. But the bank's collapse did not end black banking in Chicago. Anthony Overton, another titan of Southside commercial life, had built a parallel financial empire that proved more durable. Overton began as a manufacturer of baking powder, built the Overton Hygienic Manufacturing Company into one of the first black-owned companies to achieve national distribution of consumer goods, and used the profits to acquire the Chicago Bee newspaper, build the Victory Life Insurance Company, and found the Douglas National Bank. His half-century magazine, published for a black female readership, was one of the first publications specifically targeting black women consumers, and was both a commercial enterprise and a cultural statement. Overton understood, like Walker before him, that black women were an enormous and largely underserved consumer market, and that building trust with that market required both quality products and a cultural language that acknowledged black women's beauty, dignity, and agency. Let's go back to the South for a moment, to a story that doesn't get told nearly enough. The story of black farmers and agricultural entrepreneurs who built substantial operations in the late 19th and early 20th centuries, despite the systematic efforts of the Southern agricultural economy to keep black farmers landless and debt-bound. The story of sharecropping is well known in its broad outlines. The system by which many formerly enslaved people ended up economically rebound to the same plantations where they had been enslaved, trading one form of servitude for another that was technically contractual but practically inescapable. The mechanics of sharecropping debt, where the landlord supplied the tools, the seed, and the credit, charged inflated prices for all of it, paid low prices for the crop when it came in, and kept the books in a way that ensured the tenant always ended the year still in debt, were a form of economic imprisonment that entrapped millions of black families for generations. But within and alongside this system, some black farmers found ways to acquire land and build agricultural enterprises that were genuinely substantial. Ned Cobb, also known as Nate Shaw, as he was called in Theodore Rosengarten's remarkable oral history, All God's Dangers, was an Alabama sharecropper who spent decades accumulating farm equipment, livestock, and eventually land through extraordinary work and careful management, only to have much of it destroyed when he refused to allow a sheriff's deputy to seize a neighbor's livestock under a fraudulent claim, and was shot and imprisoned as a result. Cobb's story is a microcosm of the pattern. A black farmer building something real through legitimate means in a system designed to prevent exactly that, and then paying the price when the system asserted itself. Isaiah Montgomery built and led Mound Bayou, Mississippi, an all-black town in the Delta that was in many ways the most ambitious experiment in black agricultural economic community in the nation's history. Montgomery, who had been enslaved by Jefferson Davis's brother and who had watched the post-war promise of black political equality be systematically dismantled, believed that black Americans' best near-term strategy was to build separate self-sustaining communities that could achieve economic viability outside the hostile white economy. Mound Bayou, founded in 1887, had at its peak a cotton gin, a sawmill, a bank, a hospital, a school system, and a full range of commercial enterprises, all black-owned and black-operated. It was proof that the concept worked, that a black community, given land and a degree of political autonomy, could build something economically viable and socially complete. Montgomery made a choice that has been debated ever since. In 1890, at the Mississippi Constitutional Convention that designed the legal architecture of disfranchisement, he voted in favor of the literacy and poll tax requirements that would strip most black Mississippians of the right to vote. He defended the vote on the grounds that Mound Bayou's economic experiment needed a period of peace from white violence, and that accepting formal disfranchisement for now was the price of that peace. Du Bois excoriated him. Others, closer to the reality of life in the Delta, were more understanding. What Montgomery's choice illustrates is the impossible position that black entrepreneurs and community leaders occupied during this era. The relentless pressure to trade political rights for a chance at economic development, the ways in which the two were played against each other, the absence of any position that didn't require sacrifice. Mound Bayou survived in various forms for decades. It is still there in the Mississippi Delta, though the economic vitality of its early years is long past. What it built, for a time, was real, and what it represents, the idea that black economic community is not just possible but powerful when given the conditions to develop, remains. Let's talk about Black Wall Street one more time, but from a different angle, because there's a version of the Greenwood story that gets told as tragedy, the building and the burning, that misses something important. The most important thing about Greenwood is not the massacre. The most important thing is what it took to build it. Oklahoma Territory in the 1890s and early 1900s was, in some respects, a frontier economy. Newer, less settled, with less entrenched economic hierarchy than the Old South. The oil wealth that began flowing into Tulsa after the 1905 Glenpool discovery transformed the city with remarkable speed, and that transformation created both opportunity and instability. The Greenwood entrepreneurs who built their district in this context were not doing so in a benign environment. Tulsa was a violent, racially tense city, and the success of Greenwood was visible and, to many white Tulsans, threatening. What they built was built in full awareness that it could be attacked. The fact that they built it anyway, that Stratford put his hotel up and Gurley built his office building, and the doctors and lawyers and dentists opened their practices knowing they were building targets, was not naivety. It was a considered decision that the alternative, not building, was worse. There's a letter from J.B. Stratford, written late in his life, after he had been exiled from Tulsa and had rebuilt his legal practice in Chicago, in which he describes his philosophy about economic risk in a hostile environment. He wrote, roughly, that he had always known that what he built could be destroyed. He had seen enough of what the world could do to understand that no property was truly safe if the people who wanted to take it were willing to use violence. But he had decided that the act of building, of refusing to accept the conditions of poverty and exclusion, was worth the risk of loss. Because the building itself, the fact of it, the 35 blocks of proof that black people could create something this substantial and this sophisticated, that could not be burned. The buildings could be burned. The idea couldn't. He was right. 90 years after the massacre, Greenwood is being talked about, studied, documented, remembered. The buildings are gone. The idea is on every page of every account of what black economic achievement looked like at its best, in its fullest expression, under its most hostile conditions. The idea travels. The idea compounds. The idea shows up in the hands of every black entrepreneur who hears the story and understands what it means. The thread runs forward in time from Greenwood and Durham and Sweet Auburn and Harlem Stroll through the mid-century development of black capitalism, a term that became politically contested, but that described something real. The continued effort to build black-owned commercial infrastructure, even as legal segregation was being dismantled. The paradox of integration, which black economists and business thinkers began to discuss openly by the 1960s, was that civil rights legislation, magnificent and necessary as it was also removed some of the barriers that had concentrated black consumer spending inside the black economy. When black consumers could now shop at any store, stay at any hotel, eat at any restaurant, many of them did. The captive market that had sustained black businesses dissolved, at least partially, and black businesses that had been built on that captive market had to either compete for customers in an integrated marketplace or specialize in serving customers who chose to patronize them by preference rather than necessity. This transition was painful for many black businesses. Some did not survive it. The black hotel industry, which had served a crucial function during the Jim Crow decades, was devastated after integration made it possible for black travelers to stay at mainstream hotels. The Green Book, the travel guide that had mapped safe accommodations and businesses for black travelers during the segregation era, ceased publication in 1967, 2 years after the Voting Rights Act. The need it had served was gone, or at least greatly diminished. And with it went a significant portion of the economic rationale for many of the businesses it had listed. But the tradition didn't die. It adapted. The black banks that had survived the Depression and the post-war decades became advocates for community development lending in the newly integrated but still economically unequal landscape of the 1970s and beyond. The black insurance companies found new markets and new products. The beauty and hair care industry, which had always been built on something more than just segregation-era necessity, on genuine cultural specificity, on the particular relationship between black people and their own hair and appearance, continued to grow and diversify. New black-owned businesses emerged in industries that hadn't existed in the Greenwood era. Media companies, technology firms, entertainment empires, financial services businesses. The story of black entrepreneurship didn't end when segregation ended, legally. It transformed. It carried forward the traditions and the ethics and the models that the Jim Crow era had forged under pressure, and it applied them to new circumstances. The black bank that survived into the 21st century was still, in its deepest mission, doing what Jesse Binger and the true reformers had done at the turn of the 20th century, making sure that the communities they served had access to the capital they needed to build something. The black entrepreneur who built a company and hired black employees and donated to black causes and mentored the next generation of black business people was still, in her deepest impulse, doing what Madam Walker had done. Building something larger than herself, building a proof of concept, building a door where a wall had been. Here's what they understood, all of them. From the woman running her laundry service out of her kitchen in Atlanta, to the insurance company president whose actuaries calculated risk in a Durham office building, that the most powerful thing about wealth is not what it can buy, it's what it can build, and what it can protect, and what it can make possible for the people who come after you. That understanding, forged in the specific conditions of segregation-era America, is one of the most durable and valuable things that era produced. Not the only valuable thing. The music and the literature and the art and the theology of black America in those decades were extraordinary in their own right. But the economic wisdom, the hard-won knowledge of how to build institutions that serve communities under hostile conditions, how to circulate wealth inside a community rather than letting it drain outward, how to use the exclusions that a system imposes as the raw material for a parallel system that serves you better. That wisdom is alive. It's in the credit union that serves a neighborhood that mainstream banks ignore. It's in the small business incubator that specifically recruits black founders. It's in the consumer preference data that shows black consumers overwhelmingly supporting black-owned businesses when they know they exist. It's in every business plan written by someone who grew up hearing about Greenwood and Atlanta Life and North Carolina Mutual and thought, yes, that's what I want to do. The empires built during segregation are still here. Not all of them, not in their original form, not without the devastations of violence and policy and time. But the tradition is here. The knowledge is here. The proof is here. They built it under conditions that were designed to prevent it. And they said, through every dollar invested, and every business opened, and every insurance policy written, and every bank loan extended, and every black child sent to a school that the community had funded because the state would not fund it adequately, we are still here. We are still building. You have not stopped us. Close your eyes. Let that be the last thing that settles into you tonight. Not the massacre, not the exclusion, not the burned buildings, the building, the 35 blocks of proof, the woman with the ledger, the man at the barber's chair, the 100,000 insurance agents, the kitchen table that became a headquarters, the $1 and $500 in assumed debt that became an empire. They ran so that you could rest. Sleep well. Let's talk about one more figure who deserves her own moment in this story. Maggie Lena Walker, who in 1903 became the first woman of any race to charter and serve as president of a bank in the United States. Let that land. The first bank president who was a woman in American history was a black woman in Richmond, Virginia, in 1903. The St. Luke Penny Savings Bank, which Walker founded through the Independent Order of St. Luke, a fraternal and mutual aid organization that she had led since 1899 and transformed from a struggling organization with debts into a thriving institution with over 100,000 members, was built on a philosophy so elegant it almost sounds too simple, that every person, no matter how poor, has some capacity to save, and that those small savings, aggregated and deployed collectively, can accomplish what no individual saver could achieve alone. Walker had grown up the daughter of an enslaved woman and a Civil War soldier, raised in Richmond in the post-Reconstruction South. Her mother had taken in laundry to support the family. Walker had watched her mother's labor, the back-breaking physical work of washing other people's clothes, the meager earnings that barely sustained a household, and had determined that there had to be a way to aggregate the small savings of working-class black families into something that could change the terms of their economic lives. The Penny Savings Bank was that way. You could open an account with as little as a penny. Literally, Walker had designed the bank's entire culture around the dignity and capacity of people whom every other bank had decided were too poor and too black to be worth serving. The bank survived the Depression, survived the racial violence of the early 20th century, survived a series of mergers and reorganizations that would eventually make it part of what is now the Consolidated Bank and Trust Company, which, at its founding and for many decades afterward, was one of the oldest and most durable black-owned banks in America. Walker died in 1934, having spent 35 years building the Order of St. Luke into a financial and social services operation whose breadth was extraordinary. A newspaper, a department store, the St. Luke Emporium, which employed black women in retail jobs at a time when such employment was essentially unavailable to them elsewhere. An insurance operation, a bank, a community development fund, all from a penny. All built on the premise that poor people's savings were worth taking seriously. Walker's model, the Fraternal Mutual Aid Organization as economic incubator, was one of the oldest and most widespread forms of black financial institution building in America. The tradition of mutual aid societies among Black Americans dates to the late 18th century, to the African Union Society founded in Newport, Rhode Island in 1780, to the Free African Society founded in Philadelphia in 1787 by Richard Allen and Absalom Jones, to the hundreds of similar organizations that sprung up in free Black communities in the North before the Civil War and proliferated explosively in the South after emancipation. These organizations provided death benefits, sick benefits, burial insurance, and small loans to their members, all the functions of the financial safety net that a hostile society denied to Black people through exclusion from mainstream institutions. The mutual aid tradition was both a practical response to exclusion and a cultural statement about Black community values. It said, "We take care of each other. When you are sick, we will make sure your family doesn't starve. When you die, we will make sure you are buried with dignity. When you need money for a medical emergency or a business opportunity, we will pool our resources to help you." These organizations were not charities. They were insurance arrangements, managed democratically by their members, built on the actuarial insight that aggregating risk across a large group makes the risk manageable for each individual. The Order of True Reformers, the Knights of Pythias, the Odd Fellows, the Elks, the Eastern Stars. These fraternal organizations were not just social clubs. They were financial institutions. Some of them became banks. All of them were accumulating capital and deploying it for the benefit of their members. The Green Book, which I mentioned briefly in the context of its ending, deserves fuller attention as an artifact of Black commercial life during the Jim Crow decades. Victor Green was a postal worker in Harlem who began publishing the Negro Motorist Green Book in 1936, initially as a guide for Black travelers navigating the hazards of driving through a country where the wrong turn could mean being stranded without gas, food, or shelter in a place that did not welcome Black visitors and might not just be unwelcoming, but dangerous. The premise of the Green Book was simple. Here are the businesses, the hotels, the restaurants, the beauty salons, the service stations, the private homes that took boarders, where you can travel safely and be treated with dignity. Here is how to get from New York to Los Angeles without spending a night in a ditch because you couldn't find a hotel that would take you. But the Green Book was more than a safety guide. It was a map of the Black commercial ecosystem. Every listing in its pages was a Black-owned or Black-friendly business that had met whatever informal quality standard Green and his contributors had decided to apply. To be listed in the Green Book was to be part of a national network, to signal to the Black traveling public that your establishment was worth their business. The Green Book had advertised and celebrated Black entrepreneurship across the entire country, from small towns to major cities, from the East Coast to the West. It ran profiles of successful Black business owners. It carried advertising from Black insurance companies and beauty product manufacturers. It was, in its way, a mirror of the entire Black commercial ecosystem, reproduced in a format that could be tucked into the glove compartment of a Buick in Harlem and consulted on a highway in Alabama. The travel industry that the Green Book documented and supported was itself a significant piece of Black economic life. The Pullman porters, the Black men who worked the sleeping cars on the nation's railroads, were, as I mentioned earlier, a crucial distribution network for the Black press, but they were also, individually and collectively, an important part of the Black economic middle class. The Brotherhood of Sleeping Car Porters, founded by A. Philip Randolph in 1925 after a 12-year organizing campaign, was the first predominantly black labor union to win a contract with a major American corporation. When the Brotherhood finally signed its agreement with the Pullman Company in 1937, the porters won higher wages, shorter working hours, and a degree of job security that had previously been entirely absent. The wages they earned supported black families, funded black businesses, built black neighborhoods. The Brotherhood's victory was not just a labor victory. It was an economic development achievement for black communities across the country. Randolph himself understood the connection between labor organizing and economic development clearly. His work on the Brotherhood of Sleeping Car Porters was preparation for his later activism. His successful threat to march on Washington in 1941, which forced Franklin Roosevelt to issue Executive Order 8802 banning racial discrimination in the defense industry, opening hundreds of thousands of jobs to black workers who had previously been excluded. This executive order, signed under pressure from Randolph's threatened march, was one of the largest single expansions of black economic opportunity in the first half of the 20th century. It didn't happen because the political system spontaneously decided to be fair. It happened because Randolph and the organizations he worked with had built sufficient organizational and economic capacity to make a credible threat. That is the lesson that echoes across the entire story of black entrepreneurship during segregation. That economic power and political power are not separable. The bank that gives you a loan is also the institution that funds the lawyer who files the lawsuit. The newspaper that carries your advertising is also the newspaper that reports on the lynching and demands accountability. The beauty school that trains your employees is also the institution that teaches those employees to believe in their own capacity to build something. Everything connects. Every institution reinforces the others. The ecosystem is the point. Durham's Parish Street understood this. Greenwood understood this. Sweet Auburn understood this. Harlem Stroll understood this. The Women's Thursday group at the Atlanta Church understood this, perhaps more intuitively than any formal institution, because the women who met there had built their network without resources, without capital, without institutional support, entirely out of relationship and trust, and the shared understanding that in a world that was trying to keep them poor and isolated, the only answer was to build something together. There's a moment I keep returning to in thinking about this story. It's a small moment, not famous, not documented in any history book I know of. It's the moment that must have happened somewhere in America, sometime in the late 19th or early 20th century, when a woman who had been born enslaved walked into a black-owned bank, perhaps the True Reformers in Richmond, perhaps the Mechanics and Farmers in Durham, perhaps the Binger State Bank in Chicago, and opened an account for the first time in her life. Maybe she had a few dollars saved from domestic work. Maybe she had a week's wages from a laundry or a factory job. She walked up to the teller window, a window staffed by a black teller, in a bank run by black managers, owned by a black community organization. And she put her money in. This moment is not documented anywhere, but it happened millions of times, in dozens of cities, across several decades. And each time it happened, something shifted. Not just for the woman at the teller window, though it shifted for her children, who would grow up knowing that saving was possible and banks were accessible. For the bank, which received a deposit it could lend to someone else. For the business that received that loan, which could then hire workers, who could then save their wages, who could then open accounts. The moment at the teller window was also a moment in a chain of cause and effect that stretched forward in time in ways that no one at that window could fully trace. The people who built empires during segregation were building into the future. Not the near future. They couldn't necessarily see that far. They were building the foundations of foundations, the conditions for conditions. They were doing what every generation of builders does, if they're paying attention. Laying down something that the people after them can stand on and build higher. Let's sit with this for a moment. We're approaching the end of this journey through the storefronts and the boardrooms and the barbershops and the beauty schools of Black America during segregation. And there's something worth saying plainly before we close. The story of how Black entrepreneurs built empires during segregation is often told as a story of adversity and triumph. And it is that. It absolutely is that. But it is also a story about something larger than triumph. It is a story about the relationship between oppression and ingenuity, about what happens when a system of exclusion, intended to impoverish and contain, instead forces the development of an alternative economic culture with its own strengths, its own logic, its own genius. The separate economy of Black America under Jim Crow was not something Black people chose. It was something they were forced into. And what they built inside it, the banks, the insurance companies, the newspapers, the beauty schools, the hotels, the hospitals, was not the result of limitation, but of creativity. Of looking at a wall and deciding not to break through it, but to build something extraordinary in the space behind it. There were costs to this, enormous costs. The constant drain of energy and resources spent navigating a hostile system. The wealth that was never accumulated because the doors were closed. The businesses that were destroyed by violence that should never have happened. The talent and ambition and intelligence that were channeled into parallel institutions when they could have transformed the entire national economy if they'd been allowed to participate in it freely. Jim Crow cost America enormously. Cost it in human potential, in economic growth, in the incalculable price of a society spending enormous energy enforcing systems of oppression that served only the narrowest interests. That cost is real, and it has never been fully reckoned with. But inside the story of costs is also a story of what was built, of what remains. The institutions that survived, North Carolina Mutual, which still operates today, the Atlanta Life Insurance Company, which still operates today, the Mechanics and Farmers Bank in Durham, which still operates today, over a century after its founding, the beauty industry that Walker built, which gave rise to modern Black-owned beauty and personal care companies that generate billions in revenue. The tradition of Black entrepreneurship that runs from Alonzo Herndon's barbershop to the newest generation of Black tech founders and business owners. A continuous thread of someone looking at a door that is closed and deciding to build their own. The people who built those empires did not do it because the system was fair. They did it because the alternative, accepting the terms of a system that had decided they could not own anything, could not build anything, could not be anything beyond the roles it had assigned to them, was unacceptable. They were not naive about the hostility of their circumstances. They were clear-eyed about it, often furiously clear-eyed about it. And they built anyway. They opened the banks and the insurance companies and the barbershops and the beauty schools and the newspapers and the hotels, knowing that everything they built could be burned. Some of it was, and they rebuilt. That is the story. Not just the triumph, the refusal, the stubborn, relentless, generational refusal to accept the terms of a world that wanted to write them out of the story of American wealth and achievement, and the extraordinary, improbable, undeniable fact of what that refusal produced. So tonight, as you drift towards sleep, let the names settle in. Alonzo Herndon, who who was born enslaved and built an insurance empire. Madam C.J. Walker, orphaned at 7, widowed at 20, who became a millionaire by 50 through sheer force of vision and will. John Merrick and Aaron McDuffie Moore, who built North Carolina Mutual into the greatest black business in America from a Durham barbershop and a doctor's office. O.W. Gurley and J.B. Stratford, who built Greenwood into 35 blocks of possibility that the world tried to erase and that history has brought back. Robert Abbott, who started the Chicago Defender on a kitchen table with 25 cents and changed the course of the Great Migration. Annie Turnbow Malone, who turned hair care into economic liberation for tens of thousands of black women. The unnamed woman in Atlanta, who ran her laundry service out of her kitchen, attended her Thursday women's group, and kept her notebook with every customer's preferences, building something that would never make it into any history book, but that was, in its way, as extraordinary as any of them. These people built something that a system of violent exclusion insisted was impossible. They built it anyway. They built it for their children and their grandchildren, and for you, though they didn't know you, though they couldn't have imagined you lying in the dark listening to their story being told a century later. They built it because they understood in their bones that human dignity is not something that can be permanently legislated away, that the capacity to build, to imagine, to invest, to create something that outlasts you, cannot be owned by any one group of people, cannot be successfully contained by any set of laws or customs or walls, however high they're built. Whisper a quiet thank you tonight, not a performative one, but a genuine one, sent out into the dark toward the men and women who sat in those barbershops and those boardrooms and those kitchen offices with their ledgers and their loans and their newspapers and their hair care formulas, and decided that they were going to build something the world said they couldn't build. They did it for you in ways they couldn't fully articulate, in ways that crossed generations and decades to reach the life you're living right now. The empires they built during segregation were made of wood and mortar and print and policy paper and human relationships and the kind of determined hope that looks, from the outside, like stubbornness. And some of those empires burned, and some of them are still standing. And all of them remind us that the most powerful thing a person can do in the face of a system designed to exclude them is refuse to be excluded. To look at the wall and start laying bricks. Close your eyes. Let their story settle around you like a blanket. Rest well and carry it with you when you wake.